I'm Kyle Wong with the Integrity First team at Pikes Peak Dream Homes Realty.
And I'm Corey Martin with Bank of England Mortgage here in Denver, Colorado.
Welcome back to the Innovator, the Imitator, and the Idiot. Today we're going to be talking about renting versus buying. That is a really big topic. People have questions about it all the time. Hopefully today, by the end, we'll dispel a couple myths you may have about it and just lay down the facts.
Yeah, absolutely. You know, the first thing when we talk about renting versus buying, a lot of people look at buying as this big, arduous process that it takes so long, and they put themselves into, or in order to be able to purchase a home, you have to have perfect credit and millions of dollars in the bank. And so they avoid buying and they just say renting's easier.
Yeah.
They say renting's easier because not only because of the process that it takes to purchase a home, but you know there's other costs that come in with being a home buyer or a homeowner that you don't necessarily have to worry about when you're renting.
Yeah.
Maintenance cost.
Right.
Maintenance, just dealing with maintenance, right? You know, when you live in an apartment, you can just call someone to say, hey, my dishwasher's broken, and they just come fix it. Yeah. You don't have to worry about it. Obviously, when you're a homeowner, that's you still got to call someone when the dishwasher's broken.
Which is fair. That's super nice. Like being able to call somebody for that. And to be fair, with some of the bad agents and like loan officers we've seen, maybe it is easier sometimes. But no, when you're working with professionals, I mean, you're doing things the right way, properly, legally, and knowing the process and kind of the nuances along the way, it makes it a lot easier because more than anything, I think we reveal options to people because people are like, wait, I can do it with that much down, or I can do it with this credit, or, you know, there's sort of programs. I think another one that you mentioned recently was the 2-1 buy down.
Yeah.
That's a really great option for people that kind of are maybe just starting out or plan on stepping up in their career or really just wanted to ease into the financial strain, I guess, if you will, of purchasing.
Yeah, so. Absolutely. There's so many things there that can make it easier on you when it comes down to purchasing. The thing is that it may seem like it's a little bit harder to buy a home, but you know, just like we know, anything that comes easy, there's risk involved, or there's drawbacks to that. And so ultimately, the benefit that you get from purchasing a home versus renting is so much greater. Maybe talk a little bit about some of the benefits that you get from purchasing versus renting.
Yeah. So one of the biggest things that comes to mind immediately is just the wealth building.
Right.
I think I mentioned this in a previous episode, but if you really boil it down, you have to live in a place. Either you can pay off your landlord's mortgage or you can pay off your own. And so if you really boil it down, it's kind of like a big account, right? Where if you go to sell or refinance, that's cash that's going into an account that you can eventually pull back out in the event of a sale or a refi.
Yeah.
So that's one of them for sure. Next is just kind of the freedom of having your own place, right?
Yeah.
You don't have to talk to the owner like, well, can I do this? Or like, what does the property manager say? Can I have more than one pet? Stuff like that.
Right. I think another thing that comes that comes to mind when you're talking about the benefits of of purchasing a home, and I think you're kind of going down this path, but quality of life. We know that you are much more likely to stick around in a neighborhood or stick around in an area when you buy a home in that area. You feel more connected to the community.
Absolutely.
As a homeowner, and you are able to, not only do you feel more connected to the community, but the community feels more connected to you.
Yeah.
The community is more interested in what you have to say as a homeowner than what you have to say as a renter. And I think that really, you know, it's not one of those things that we calculate into, you know, the benefits of buying a home, but it can actually result in more happiness.
Yeah, I mean,
not saying it all 100% will, but you know, it definitely doesn't hurt when you have connections to the community that you live in, and the community has a connection to you and is invested in your happiness and your well-being too.
Yeah, because there's more skin in the game, and then also, you know, I don't know if there's any science behind that, but that kind of pride of ownership when it's your car, when it's your family, when it's your house, you know. people have this sort of pride about it, and they want to take better care of things that are their own.
Absolutely. And I think, you take better care of it, but like you said, you don't have to go to the property manager or whomever to make any changes or upgrades to it. And that stuff really matters. The difference between being able to hang up the pictures that you want to hang up.
Yeah.
Or paint the room the color that you want to paint it.
Exactly.
Or, being able to, for me, it was a golf simulator and a smoker in the backyard. And those things really, really matter and contributed to my happiness in a way that I wasn't able to do when I was renting in an apartment. And so I think that it's really, really important to keep those things in mind, like just personalizing the space in a way that you can't do when you rent.
You can settle in a little better when you feel like it's yours as opposed to just, I don't want to mess something up for somebody else.
Yeah, absolutely. Absolutely.
One of the next things is what is the cost of waiting? I think that's a big factor to take into consideration because everybody's heard the phrase opportunity cost. And it's kind of similar. So what does it cost you to wait to rent? Because everybody says, well, Dave Ramsey said I should have 20%, or my dad thinks that I should, pay 50% and only finance because houses are so expensive. But there are a lot of factors that go into that. Right. Obviously, we both want you to make a responsible decision. You don't want to be house poor. But what are some of your options? What does it cost, right? Because like we said earlier, you're going to be spending money to live in a place, whether it's going into your own financial account and you're building that wealth, or if you're paying somebody else's mortgage, right? Or if you're renting an apartment. And so how much money does that actually make you lose in the long run if you wait just a few years? And people always talk about I want to time the market, I want to do this, I want to do that. But the truth of the matter is, real estate always appreciates over time. So yes, there are dips, and yes, there are recessionary periods and times where it does go down below. But if you don't intend to sell, it shouldn't matter anyway, because that's your asset, and especially something that's required for your living. And so obviously I don't have the exact stats for that, but man, just waiting, I believe 2 years, because if you think about it, let's just say you spend $2,000 a month on rent. Right. Not utilities, nothing like that, just $2,000 flat.
Yep.
That is, what is that, $24,000 in a year? Right. $24,000 in a year. I mean, that's a pretty decent sized down payment on a home, or much less a condo or anything like that. And so, the time that it's going to take you to build up that 20% theoretically, or I've heard some people say, hey, I want to wait until I get this raise. Well, unless you're getting a 20-30% raise, it's not really going to make that much of a difference, because next year, not only are the homes going to appreciate, so your 20% is going to be worth less, but also due to inflation, I always say this, you're hedging your money against inflation when you do that. Right. So there are a lot of factors to consider, and waiting can actually just waiting a few years can cost you a lot of money.
Absolutely. Absolutely. I think that when you're looking at what is waiting cost me, I think that when you're talking about what is waiting cost me, you're looking at, okay, if I buy a home now versus if I buy a home a year from now, how much more am I going to be paying for that home? Or how much less am I going to, or more, am I going to be paying in terms of interest rates? Right. And what we know throughout history is that home prices rarely drop. If so, they don't. The bottom has fallen out on the economy, and we've got some other things to worry about, right? Yeah. But home prices rarely tank, right? Rarely bottom out. You're not going to have a $500,000 house or a $400,000 house drop 20% down to $300,000. Right. That's just not going to happen. And so what you're looking at is a matter of, if this house is $500,000 right now, it's probably going to be worth 5% more in a year. Mm-hmm. So can I count on making more than 5% more over the next year? Consistently, right? Yeah. Or will the drop off in interest rates, will that match the 5% that I'm losing in home appreciation? And so I think that oftentimes we're trying to time the market and say, oh, okay, well, maybe home prices are going to be a little bit lower in the wintertime, or I'm just waiting for interest rates to drop. Well, chances are home prices are not going to drop. But also, what you lose in appreciation goes up in interest rate. And so oftentimes there's not really a benefit to waiting or to timing the market.
Yeah.
The best time to purchase a home, if you're in a position to, is now. And from there, you can always refinance your way into a lower payment.
Yeah.
You can, if you have a lot of equity, you can take out a HELOC loan and, leverage that equity for whatever home improvements or whatever financials that you have going on at the time. But waiting to purchase the home is usually, if the home's on the market and you can afford to buy it, you can purchase it. You should probably do it now rather than wait.
Yeah. And that's exactly what I always say, because you have a lot more to lose than you do to gain. Because let's say, right now we're heading into a period where we're kind of adjusting markets, where a lot of agents are a little behind. So home prices month over month are declining. Year over year, I think the recent stat for, Denver or something, is still 40% higher than what it was just a year ago. So it's like, you can look at the month over month or the week over week as specific as you can get and be like, oh no, we're hitting a period. But if you look at the grand scale of the graph, it's gone down here, but it's going up here over time. So, if you want to save a couple grand, maybe that would help. But the other thing, like you mentioned, was the interest rate. Like, are you really willing to save like $3,000 on home price if it's going to affect your payment by like $400, $500 a month? That's kind of a big deal, especially because that interest rate is the one that matters over 30 years if you were to keep the same loan for 30 years, of course.
Right.
But yeah,
that's it. And so I think for the next part of this conversation, we should probably look into when people should buy versus when they should rent. We've talked about timing the market. I think we can agree that the best time to buy is now.
Now and 20 years ago.
Right, exactly. If you're in a position to purchase a home, if you're capable, if you have the funds, the employment history or the employment to do so, you should probably purchase. But as far as renters go, let's flip the script on that. When's a good time to rent? I think that those people would be, it's a good time to rent for people that know that they're going to be moving, people that know that they aren't going to maintain the same job for an extended period of time. Those would be people that are in a good market to probably rent, probably shouldn't be looking at buying at the moment.
Yeah, absolutely. I always just say people that are quite literally looking for short-term housing. So like a year to 2 years maybe, because obviously you don't want to get into a house, pay all the closing costs, all this stuff, and then sell it 6 months later. Right. Because then you will start getting to a point where you're losing money.
Right.
If you're not doing major upgrades and stuff. But yeah, so sometimes military, when they PCS, permanent change of station, they come into town, they relocate. They don't know exactly how long they're going to be there. Everything's kind of up in the air. That can be a good time to rent, or people that are just in a shaky financial situation. So oftentimes you'll see younger people with either little or no credit established, or perhaps people with bad credit that just aren't making enough money to save a down payment, however small that may be, and then consistently make those payments.
Right.
Because maybe they moved to a town right out of college. They're not sure where they want to put their roots down. Or sometimes I've seen this where people are starting businesses, and obviously you can make anything happen on the lending side, right? We can pull pay stubs and stuff like that. But if you're starting a business and you're kind of not sure how much of your personal funds are going to allocate towards the business, that's when it would be another conversation, because you don't want to get into something and then things go sideways and you're like, well, now I'm on the hook for this huge investment, hundreds of thousands of dollars. That would be bad. So those are just a few scenarios. But overall, like we said, it is the best way to hedge against inflation, to build wealth generationally. And then, we talked about this before too, like 90% of millionaires started out by purchasing a first-time residence.
Yeah.
And that's how they started kind of that. Because if you're just throwing away money every month, think about it, you're not buying a place, you're buying time. Yeah. Right? And time just goes away. Even if the house doesn't. So
that's it. So just to recap, if you're a person who has steady employment and can see themselves in the same area for the next 3 years, you should buy.
Yeah.
If you are a person who doesn't necessarily have steady employment or plan on moving over the next, year to 2 years, then you should think about renting.
Yeah. And then one more thing I actually wanted to add is that there's so many options these days even for younger people. Like, let's say you get a house, maybe you have to co-sign with a parent. Maybe you rent out 3 other bedrooms in a 4-bedroom house. Like, there's so many things you can do. You can do long-term rentals for renting out the basement. You can do short-term rentals for Airbnbs if it's a destination or stuff like that. Right. So, if you get into a house and all of a sudden you don't love it, or maybe like you're not making quite as much money as you thought, there's always something you can do.
Yeah.
Always.
There's always an option. And I'm happy to discuss those options with you. Like you said, I'm happy to go over renting out a room, getting a co-signer. Maybe you do purchase like a condo or a townhome, or maybe it could be a single family residence. But then, you know that you are moving in 3 years. And so that property now becomes an investment property for you. And you continue down the path of building wealth through real estate. But ultimately, if you've got the funds, if you've got steady employment, then you should be looking to purchase. If you don't think that you have steady employment, or you feel like you're going to be leaving a location soon, then renting is a good option for you. No matter what, it's really, really hard to time the market. That's just less than 1% of home buyers in the history of real estate have been able to time the market perfectly. And so we suggest you get out there, you talk to your lender, and you try to get into a home, because the cost of waiting is astronomically high.
Yeah, and it's only getting higher right now, that's for sure.
That's right. That's right. I am Corey Martin with the Bank of England here in Denver, Colorado. You can reach out to me at Mortgage Consultant 5280 on Instagram, or reach me at Corey Martin on Facebook.
Yeah. And I am Kyle Wong with the Integrity First team at Pikes Peak Dream Homes Realty. I'm also on Instagram at Realtor Wong, or you can check out my website below.
Awesome. And that is the Innovator, the Imitator, and the Idiot podcast. Thanks, guys.